I've had, I don't know, four high-profile guests, and I'll consider you into one of those high. I'm one of those high-profile guests, but really, in the past 4 weeks, that have all said we are in the biggest bubble ever. But I don't want to put words in your mouth. I want to know where we're at with everything, and it's all seems to be hitting the fan, but yet equity prices seem to be relatively stable.
If you look at price to sales, total market cap of equities as a percentage of GDP, risk premiums are negative. These are all record high valuation metrics, higher than they've ever been before in history. And what makes it so unique is that you have bubbles existing at the same time concurrently in real estate and in equities and in credit too. If you look at things like uh, these business loans, buy now pay later loans, private credit, through the roof, trillions of dollars. So and it was all a function of the Federal Reserve falsifying the borrowing cost of money. So there's your three bubbles. They exist concurrently. They're going to burst. I have a model that lets me know when. I'm still net long the market, um, participating in these bubbles, but very much prepared to exit rapidly when I have to. So maybe it will come back in 10 years or 15 years, but I don't want to lose half of my money. And I certainly don't want to wait 10 or 15 years to get even in nominal terms. Because I think the real value of I don't think there's any way of, Andy, I don't think there's any way of avoiding a plunge in the purchasing power of your holdings of equities. Because
Yeah.
I think they're going to drop in nominal terms, but if they don't drop in nominal terms that much, it's because they're going to plunge in real terms. In other words, what I'm saying is, I think the Federal Reserve, along with the Treasury, is going to destroy the purchasing power of the U.S. dollar
Yeah.
against assets.
So, before I'd love to talk about your methodology, whatever you're willing to share. But before that, let's talk about that because it seems like the powers that be absolutely want the dollar lower, if you would, which is
Yeah.
basically a monetary inflation, which is a tax on, is really a tax on the middle class and the lower class, if you would, in regards to affordability. But talk to me about that because the dollar does seem to be rolling over. Do you expect more of that to come? And what exactly does that mean? Because I could see a situation where equity prices remain, and even home
Mm-hmm.
prices remain elevated.
Mm-hmm.
But as you just previously said, that can go on for years. And then you're looking at opportunity costs and having no appreciation in your portfolio or your real estate.
Yeah. Well, shorting the Weimar German stock market post the World War One would have been a really bad idea. Um, Even though in actual purchasing power terms, it dropped, more than half. But I worry about the middle class has been eviscerated, Andy.
Mhm.
I mean, this is an institution that's supposed to be protecting these people. Um, but they can't even afford a house anymore. And you look at if you look at quintiles, it's really only the top 20%. The top quintile that's really holding this economy together because of the bubbles and the asset prices. But look at the bottom four quintiles, especially as you get towards the first, second, and third, um, say the bottom 60%, they have nothing. They live paycheck to paycheck with just a few $1,000s in the bank.
Mhm.
It's a shame. You can't have a viable, healthy nation with such a bifurcation um, of living standards.
Do you think this is by design, if you would? And I get it that that sounds conspiratorial, but I'm becoming more and more into that camp, if you would.
I don't think it. So not that I haven't thought about this. I could be wrong, Andy. I don't think it's nefarious. And how you define nefarious means evil. Um, I think it's more arrogance and hubris.
Yeah.
It's about power. So maybe it's a little bit of a nefariety there. So people in charge thought, hey, we have a printing press. I want to maintain power. The way to do that is to give the people bread and circuses. This has been going on since Rome. So maybe that's the evil there. It's like, I need to maintain power. I need to run massive deficits. I need to make the people happy to keep my positioning. Um, and then it gets to the point where you just can't stop, because if you stop, it's a steep depression. It's not a mild recession. A massive rebalancing of capital in the country. Actually,
Yeah,
not just the country; it's the globe. All the developed world is all screwed up.
yeah.
Canada, Europe, Japan, China. Yeah, China, forget it. I'm not saying we're there yet. We're not, but that the real risk, where I think we're going to end up is I think we're going to have stagflation like we've never seen before, like unimaginable rates of stagflation. You have a kind of anemic growth, but very high rates of inflation. So you want to be short bonds. And what I have a 20-point model. I'm looking at things like the copper to gold ratio. I'm looking at financial conditions index. I'm looking at credit spreads, some arcane things that let me know what the real economy is doing. So I don't panic. I'm not reading headlines. I want to know when the handful, I call it this cabal of like despots and autocrats, the plutocracy that really runs the world. Um, when they use their billions, they know what's going to happen and they start acting. My model will pick up on what they're doing, and I'll be able to get out and short before really most of this damage or a significant part of the damage is done. And the damage, I think, could be, as I said, extremely significant when it occurs. So, for an example, you could say, well, what happens if the Fed starts cutting rates aggressively and the long end of the bond market just screams higher, and you just hit a vacuum where the stock market just plunges?
Right.
I think you can go lock limit down. By the way, I think you can trigger circuit breakers, 7%, 13%, where they just stop trading. I think something like that is likely to happen. A high probability of that happening. I don't know when. I can't tell you when. It's just not going to happen now. I can tell you that the model says, hey, it's clear skies, it's blue skies right now. The only thing I won't just want to say when I say it's blue skies, given the valuation where we are, it's the risk reward is not there for you to be overly aggressively long, just like overly aggressively long Nvidia or tech stocks. I think that's insanity. But be net long like I am. But hey, energy, some of the precious metals are really working well. Aerospace and defense has done very well. Some international stocks doing well. I got, Australia and Mexico, even India. I think India, yeah, even though everybody hates India now because of that trade, I think, who knows, one weekend we wake up and Modi and Trump signed a deal and this, it goes up 10% in one day. But the downside is, I think downside is limited there. So those are the things I'm thinking about. I am long, about 25% long the stock market, net long. I have no real shorts in the portfolio. Um, Lots of short-term treasuries. So we're safely participating in this bubble. Safely, we're watching it closely though.
Michael, if people want to do business with you, they want to learn more about you, how do they do that?
So the website is pentoport.com. And on it, you can avail yourself to the midweek reality check, uh, which is basically the most salient data of the week in my independent and objective analysis. If you are a US citizen and you qualify for the portfolio, then I will directly manage your money in the inflation, deflation, and economic cycle model portfolio strategy myself. I'll do that myself. That's where, I have a lot of my assets in there too.
Excellent. I'll put all of that in the show notes. And Michael, you weren't expecting me to say this, but I'll just talk to all my viewers and listeners. I have watched Michael on the CNBCs, if you would, out there, and I say that very liberally with all of the networks. And I've been a follower of Michael's, I don't know, for 2 decades, if not more.
Wow.
And that's what originally attracted me to Michael, but off camera, and Michael has been extremely gracious to me, not only with his time, but also our interactions. I want to thank you for that, Michael. Just coming on the show, very gracious. And Michael, I had some big, high profile people come on early on. Michael was one of the first. So you have my gratitude. I want to thank you so much for that and just help me get going. And it's been quite the journey. We've been blowing up. So if you, all my viewers and listeners, which is a huge following now, Michael's one of the good guys, somebody that I have immense amount of respect for.
Well, I have a lot of respect for you, Andy, and I give you a lot of thanks for saying that, and may God continue to bless you with much success as you continue to help people through this um, difficult time that's approaching.
Absolutely. Thank you so, Michael, and I'll have you on whenever I can get you.
Thank you, Andy.